we have Bajaj Finance fourth quarter numbers coming in. Let's just understand the first set of numbers that are released by our colleague Harsh, who's connected with us. Harsh?
Well, yes, so the calculated net interest income has come in just below that 6,300 crore mark. We were expecting it around the 6,200 crore. It's largely in line with what the street was anticipating. We're also seeing operating profit largely in line. Provisioning has come in slightly elevated, and profit after tax has come in at 3,160 crore, which is a solid 30% jump on a year-on-year basis. Overall, it looks like a steady set. GNPAs have improved by around 20 bips or so, and that essentially ensures that asset quality continues to improve for Bajaj Finance. The Bajaj Housing Finance book has grown 30% year-on-year. Bajaj Finance on a consolidated level continues to grow at 25% year-on-year. Customer franchise also continues to grow quite healthily. Overall, it looks like a beat, at least at the moment. That's the sense. But we have a couple of analysts here with us to try and break the numbers down. We have Rahul Malani with us, who's the banking analyst at Sharekhan, and we also have Kajal Gandhi, who's part of the research team at ICICI Direct. So Rahul, let me come straight to you. We'll await while Kajal comes through. Talk us through the numbers, at least off the bat. How do they look in your view?
So overall numbers in terms of net income has seen a marginal beat from the consensus by 3%, and on the operating profitability front, it has come in line with the estimates. If you look at the earning PAT number, it has been marginally beat by around 2%. So overall, a good set of numbers from Bajaj Finance. If you look at, they have been maintaining strong margin discipline despite the rising interest rates, which are driving this earning beat. So we continue to expect a strong 25% loan growth over the next 2 years. However, the shift to secured loans due to limited scope in the existing unsecured segments and higher competition and challenges in the unsecured segments may lead to some tempering of the earnings growth. So overall, in terms of decent numbers from the Bajaj Finance.
Right, Rahul. We also have Kajal, who's joined us. Hi, Kajal. Good evening. How are you looking at the numbers? In terms of net interest income, there's a healthy expansion. PAT has in fact gone up. There's been some amount of leverage at play as well there. How do you look at it?
So broadly, the numbers look largely in line with estimates, a marginal rise then maybe consensus and ours also, but then it should be seen as largely in line with estimates because with the growth numbers already being there at 25%, we were expecting NII actually marginally higher than the number that has come in. So, and with credit cost or the overall provisions remaining largely in line with previous quarter numbers, looks only steady state and inline numbers.
Let me come straight.
We are yet to see, the breakup of the loan books, which can be slightly interesting, but other than that, it looks steady.
Right. Rahul, let me come straight back to you. So let's talk growth, right? 2 lakh crore balance sheet at the end of FY22, currently at 2.5 lakh crore, 25% growth chugging along. For how long can Bajaj Finance sustain this going forward in your view?
Basically, at present, it looks that for the next 2 years, there will not be certainly any problem to achieve that 25% growth. We cannot assume, we cannot extrapolate that 35 to 45%, 40% growth, which in the earlier decade, which they have been reporting. Because there has been a major shift to all the banks and NBFCs. They are running behind the retail and unsecured segments. So there has been certain competition and challenges in the unsecured segments to grow further, and in the consumer durables, which the Bajaj Finance is a leader. But I think so. 25% around numbers should be comfortable for Bajaj Finance at least for the next 2 years. And as and when the omni-channel strategy is live, so we should see the gradual pickup in the growth.
Right, and Kajal, what would your view on this one be? You also expect the a growth of 25%, and what are the other levers for expansion, if I may try and understand from you?
So see, if you look at the composition right now, the mortgage book has almost become a one-third, which was earlier not there. And now, with it becoming a larger duration book, making this growth look 25% looks much more easier as compared to what was there in the past, where it was more of a consumer finance and churn was very fast. So at this stage, I think 25% sustainability does not look too much of an issue, but that is already there in the multiple. So that growth, anyways, I think is the guided one and will likely be done and should not be a big problem, I think, at this stage. And they are also looking at other avenues which they have already pointed out, like on the commercial vehicle or tractor, those kind of segments, some bit of microfinance. And so those segments which are high yielding, they are already going to pursue that. And digital presence also they are expanding. So I think these are the few segments where they will want high margin products to be pushed into and get some business growth from these. But those things are definitely crowded at present too.
Right, and let me stick to that a little bit, and let me come straight to Rahul again. Rahul, fee-based income as well as, them venturing into different products as well, including their, app kickstarting in FY23 itself. What kind of levers does that present for Bajaj Finance, especially from a fee-based income perspective? Because that straight percolates to PAT, right?
So basically, we believe that entering into new business profit pools will enhance the profit pool, and apart from that, the current regulations in terms of the insurance commissions which they have been the caps has been removed. So all in all, this should benefit. There is a tailwind related to the core fee income.